We are so that you're going to have to take risks, but we've been given the gift. That whole retirement crisis video that I did way back when, I said, listen, the gift is crypto. That was 2016 or something. And that gift is the gift that keeps on giving. It is everybody's chance to get ahead. It's so important that you don't mismanage the opportunity. Many people did that in the last cycle, and I'm trying to help people this cycle. Own the main assets. Don't trade around. Don't have FOMO. Don't use leverage. Just hold it. Just give yourself 10% of your bag, or 20% if you're really a true degen, to allow yourself to invest and lose money and try and make money in the 100x's. But don't touch your other stuff.
Over the past year, Real Vision CEO and co-founder Raoul has had one important piece of advice for investors: how to get ahead of what he calls the fourth industrial revolution, or the exponential age. According to the macro guru, he realized the importance of the new age when he noticed a few things. 1. Central banks were printing more money than we ever thought possible. The reckless money printing from the Federal Reserve and its counterparts inflated asset prices into a fake bubble. 2. The pandemic accelerated the adoption of at least 10 technologies, including e-commerce, delivery robots, autonomous driving, video conferencing, and telemedicine. Pal also realized that when you change the denominator into the Fed balance sheet, none of these technologies are actually in a bubble. It just seemed so because the dollar has significantly lost value. His conclusion from all this observation was that the price valuations of technologies would continue to grow exponentially over the coming decade. This is why he has been telling investors to get ahead of this revolution before it hits fully and prices are off the charts. Pal believes a global economic reset happened in 2008, with the world's major economies realizing that the two most important factors for GDP growth, demographic and productivity growth, are either flat or declining. Yet, debts have kept piling up, hitting 100% of GDP for most of these economies at different points since then. With the world's economies now approaching a critical phase due to unchecked money printing by central banks, Pal says the only way out of the GDP disaster is to increase productivity growth. This is where crypto, technology, and the exponential age come in, and why the macro analyst is so bullish on these two important asset classes. We will now bring you clips from Pal's ongoing Your Future series, as he does a deep dive into the many economic challenges the world faces today, and how you can get ahead by investing in cryptocurrencies and technological stocks. Pal also gives his thoughts on the ongoing crypto bull market, which he describes as a huge opportunity you cannot afford to miss. As we bring you the clips, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
The Everything Code is really all about understanding that they are paying the interest on the debts by issuing more debt, and that ends up in the bank balance sheet. It was also the understanding that the world has become entirely cyclical now. The ISM cycle is perfect from one to the next. So we've got this amazing 4-year cycle. It's actually 3.5 years. And that was in fact driven by debt maturity. What we found is that after 2008, well, 2008 was a great reset, as we know, but it was also a debt jubilee. All of the major central banks around the world agreed to forego interest payments. That's what zero rates are. So they said, we don't need to pay interest payments because we need to rebuild our balance sheets. So they rebuilt their balance sheets by refinancing in the 3 to 5 year sector. And that's created this perfect cycle, which is the presidential cycle, the Bitcoin halving cycle. It is the Everything Code cycle. And that cycle drives everything. It's why I've been able to do so well in predicting where markets are going, because that cycle is the liquidity cycle, the debasement cycle. It's all one thing, and it drives assets. Once you understand that, you understand most of the game that lies ahead. Now, this is not the first time this has happened either. The 1950s were remarkably similar. This time around, it wasn't a demographic bust that caused it and the debts that came because of demographics. The last time around, it actually came from, obviously, World War II and those debts. But what did the governments do? In the US, they imposed yield curve control, which is financial repression, which is the same as adding things to the balance sheet. So they kept interest payments low. The economy, they restructured debts. The economy became perfectly cyclical, just as it is now. It's almost identical. And asset prices correlated entirely. So they ripped higher, corrected, every cycle, as they're doing now. So that whole 1950s thing actually plays out perfectly in the equity market. When I look at the chart of now versus the 1950s, it looks very similar. And when I zoom out, it kind of suggests what's going ahead. You see, in the 1950s, their piece of magic was to keep financial repression going, keep the cycle going until productivity increased. And eventually productivity increased, financial repression helped to wear down the debts. And over time, the economy took off and we had the 50s and the 60s and then into the 70s. And that was a magic period for GDP growth because of what they did. And they're repeating it now. It's very clear to me that that is the game. That is the game the Japanese are playing, the game the Europeans are playing. Everybody's playing the same game. So we know the game. We know debasement of currency is the other game. So here we know that if we don't play their game, you're going to get if you invest in assets that don't beat the balance sheets, the 15% a year, you're going to be losing money every year. So it's really important that that is your hurdle rate. And when you look at that, you suddenly realize that most assets don't beat it. The S&P doesn't really beat it. Gold certainly doesn't. Real estate unlevered doesn't. Most things don't beat that debasement. So if you invest in other things, you're going to lose money. And that's a hard lesson for people to learn. Most people don't understand this simple fact, is you are getting poorer by investing in these things. And that was the big realization that got to me. It's like, oh my God, my whole macro world has been turned upside down. Because everything we thought was the investable asset became the non-investable asset. And everything we thought was non-investable because it was riskier became the asset. Because when you look at everything versus the Fed balance sheet as a simple example, there's only two assets that have gone up. And I've talked about this at length before. It's technology and it's crypto.
Pal is so extremely bullish on crypto asset prices in 2024 and beyond. According to Pal, a renowned investor, macro analyst, and former Goldman Sachs executive, the cryptocurrency industry presents a rare opportunity for investors to make money. Not just a few thousand here, a few hundred there, but life-changing money that can save you from the very gloomy global economics and help you create generational wealth. Plus, this is not just a rare opportunity, it is one that is strictly unique to cryptocurrencies and other digital assets. Pal's short and long-term views on cryptocurrencies are extremely bullish. Pal is certain that the industry will grow by 10x to $10 trillion within the next few years and almost straight up to $200 trillion from there. His only concern is that many cryptocurrency investors are about to ruin this golden, once-in-a-lifetime chance by using leverage and chasing the 100x return so much that they lose sight of what's important, buying and holding onto your main bags for as long as possible. Let's get back to the interview.
Since I first started talking about Bitcoin, it's up 450,000%. Most people just still don't get why I care about this. It's because it's the only way I see to truly give yourself the opportunity. And this is, you can see this behavior of investing in risky things by the speculative economy that has taken hold that people can't understand. It makes total sense to me. If your future is because you're young, you are going to do what you're supposed to do, buy your 401k, that kind of locks it in because it's not underperforming the balance sheet, it's not outperforming. So that's savings. Okay, I get that. And it's better than saving in cash. But everybody knows they can't get ahead. So people have become speculative. Speculative is okay if it's not at the casino. If it's in a secular trending market like crypto technology, go for it. Just do it in the right way. So we see the rise of not only tech investing on Robinhood, but option investing on tech in Robinhood. That's the way, the lottery ticket economy, where people just don't feel like they have a choice. There's no way for them to get the 100, 200, 300 grand that they need to get in the property ladder or to feel like they've got the savings they need. So people are taking bets. But in a secular market, actually pretty intelligent risk taking. And options are pretty intelligent too. Over time, if you get it right, you have the right tools, you learn how to invest. It's one of the core things that we do at Real Vision is try and teach people how to do this. You can make money. Crypto has been even easier because the sheer magnitude of the moves means you just buy and hold it. You just own the highest quality assets and do nothing. I mean, doing nothing is really that easy. Has been basically giving you about 100% a year returns for the last 7 years, 8 years. It's actually higher if you go back earlier in Bitcoin's time. But if you basically look at that, you're going to get somewhere between 80 and 200% returns, depending where you are on the cycle over time. So these are the compounded returns. These aren't just, year in, because obviously some years you're like 500% returns and other times you'll make down 70%. People don't get their heads around, but this is actually the best risk-adjusted reward asset of all time. Fidelity have this beautiful chart of all of these dot plots of risk-adjusted rewards of assets. And there's tech is quite high and, some markets are high, and then cyclical stuff like oil and stuff is low risk-adjusted returns over time because it doesn't really do anything. All of this, S&P, all in this. And then you go and there's a blank paper, and somewhere right at the top is a dot that says Bitcoin. It's a alien. We have never been given an asset like crypto that has this risk reward by any yardstick. Drawdown versus, drawdown risk, volatility adjusted, any way you want to look at this asset, as long as it's over a period of time, it's by far and away the best asset we've ever been given. It's also the best performing asset of all time and remains the best performing asset. Every 4 years of that everything code cycle, Crypto Spring, which was last year, best performing asset in the world. Crypto Summer this year will be the best performing asset in the world. Crypto Fall next year will be the best performing asset in the world. Crypto Winter, which is 2026, will be the worst performing asset in the world. It's kind of simple. You don't need to do anything. You just need to buy it and hold it.
The groundwork has been laid for the cryptocurrency industry to continue to grow and develop in the coming months, years, and decades. But the clincher, according to Pal, is the fact that we are heading into a massive macro summer, during which there will be an explosive increase in global money supply as central banks scramble to save their various economies from total collapse. It takes no genius to piece it all together. Explosive money supply growth, various technological platforms emerging and developing together at an equally explosive pace, and, at the center of it all, the cryptocurrency industry. Cryptocurrencies are indeed the fastest horse in the race, a fact which the industry has proven over and over again. 400 million users in record time, faster than the level of adoption of any previous technology. Bitcoin, the leading crypto asset, is already a mega-cap asset in just 15 years. At the moment, Bitcoin is easily surpassing companies like Berkshire Hathaway and Meta in market capitalization. This is despite all the negative campaigns against the industry, especially in the United States. They continue to try to put the industry down, but it has survived every attack and only gotten stronger. This in itself is enough reason to be very bullish about the next crypto and macro cycle. What are your thoughts on Raoul Pal's outlook for crypto, tech stocks, and macro in 2024 and 2025? Please drop your comments as well as your predictions for your favorite crypto assets in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.